Good morning, everyone. Welcome to the Euro Trade. I'm your host, Market Stalker D, and we're going to be looking at what silver is doing. I picked up a long last night because I was awake all night. One of my dogs had the big snip, and honestly, he wasn't handling it that well, and he was just whining and whining and whining and then climbing on top of me, wanting to be cuddled. So obviously the anesthesia kind of did a number of him, but he's fine, he's fine. It's just that I have not slept. So with that in mind, I have to be a bit careful about my own emotional regulation. So I'm choosing to run a more swing type trade rather than try to get involved in the intraday movements. So one of the things that happened last night was this classic pre-Shanghai exchange smash and then a very prompt reversal. So this is something that happens very frequently, and if I'm awake at that time, I will usually try to take advantage of that. It can be a very good area to get involved in a swing in a trending market if the price obviously quickly moves away from it. And as you can see, the 66 level here was very quickly reclaimed, and then we went into some price discovery, established the Asia high at 66.81, which now becomes a reference for any further moves. Now I have my conterminous line from this London drop reversal, and also this is also very, very normal. London tends to fade Asia moves, so they kind of fade each other. I call it the Tom and Jerry chase. I talk about it in my pro development program in quite some depth, but this is a behavior that is seen quite frequently. Now, are we going to get a massive rise up? I don't know. I think we're probably going to get stuck in a bit of a range for the duration of this stream, and then the closer we get to that silver London fix at midday London, which is quite a few hours away, we may see the final decision. So some of my targets, if we do reclaim this conterminous line, will be first and foremost 67. If we manage to crack 67, if I look at the options activity, everything above that is pretty light, and that could mean a potential for a gamma squeeze towards the next major area, which is actually all the way up at 70, which is hard to say and hard to believe, but hey, that is the next target. Whether that gets reached today, tomorrow, or early next week, I don't know, but I think we have a pretty strong chance, strong probabilities of reaching 70 by the end of the year. Absolutely crazy to think about that, but it is what it is. We have to trade what we see and not whether we think something is expensive. Now, from a macro side, we do have economy and a whole bunch of stuff that is very supportive to silver. Hold on, just give me 1 second. All right, so where were we? Oh, Coach Robert is still awake. Who needs sleep? Yeah, exactly. Who needs sleep? We'll see whether that affects me or not. But yeah. Okay, so now the final thesis that I have here is that we just stay contained between 66 and 67, and we don't really do much. With the way silver has been trading, yesterday there was a little bit of an increase in the implied volatility, not like massive or anything, but that could provide some uncertainty for the market participants, where you can have like big sharp unwinding moves as well. And if that happens, obviously the Asia low needs to break and then just keep going rather than the classic Asia low bust and reverse. If that happens, obviously this trade will no longer be valid, which is why my stop is located where it is. But with the way I've missed a few, like obviously we've had some issues, everybody knows that. So I've actually missed quite a few trades that played out like exactly as they should have done. But obviously, because of various factors, the Topstep, I wasn't able to enter them on Topstep. I entered them on some of my personal accounts though, and they did very well. And also, just to keep you all informed, I did have a very short options long trade on crude oil, which is now off the table. So I picked up some calls around 55 because that was one of my sort of orientation points for crude oil, and I no longer trade crude oil intraday, but I do still trade it very occasionally when we get to the edges of the ranges, and I do pretty risky strategies at the top of those ranges, so anywhere between sort of like 65 and 70, and then on the low side I will do the safer option, because crude oil does have a downward bias at all times, and you know, I want to have the defined loss if it just kind of keeps bleeding lower. However, if we get up to the top of those ranges, then I usually do short options. So a bit risky, but again, I do know what I'm doing with crude oil. Wouldn't recommend that for newer traders, especially if you don't quite understand how the options properly work. But I have a very decent grasp on what they're trying to do and how, and it has always been a part of my analysis, seeing where the largest options are, and then either using them as magnets or using them as potentials for hedging, fades, intraday. So that's something that I've probably used right along the time when I started using the ADR, which was like back in 2008. So yeah. KC Trading is saying, hi D, guess what? I just requested my first payout with Topstep. Well done, that's amazing. And he also says it's a big one, 3 times 5 grand, so 15 grand heading your way, KC Trading. That's absolutely amazing, especially for the holidays, right? So, you know, you're gonna have a great Christmas and New Year. They also continue to say, couldn't be happier, had a really nice trading session last week and this week, really feel in the zone. Wonderful, right? That feeling, this is why, you know, we do this. This is why we share our experiences as well, so that we can see that. All right, so we have another question. So hold on, let me just see. So Xian wants to know, could you go through your entry for silver? I saw the big down move, but was not sure where to enter. Did not want to catch a falling knife. So here's the thing. Shanghai Exchange is very important in silver, copper, and gold, right? Shanghai Exchange begins trading about 90 minutes into Tokyo. So right around when Coach Dakota starts his stream, that is when you typically see these like big unwinding moves. Now, we did have a day or two where the market opened and they just kind of screamed to the upside. That's not that probabilistically relevant, because while it does happen, what happens more frequently is that they fade the move of New York, some looking exactly like this. So it looks very scary when it happens. But basically, my entry was time-based. I know it sounds weird, but it was time with a bit of tape involved. So what I typically do is I wait for the big flush, and then as soon as Shanghai Exchange opens, if you see the timestamp here, it's 1:30 a.m. That is when Shanghai opens in my time zone. I just look at the tape to see whether there are buyers or whether there's any absorption happening. Like, it can happen in multiple ways, but typically after this big sweep, you will see the price almost stop it dead in its tracks. And then Shanghai Exchange opens, and you look at tape and you start seeing bubbles growing on the long side. Sometimes you can have a delta flip as well, cumulative delta flips to the opposite side, and then everybody just plows into the opposite side. So this is why this is not a catching a falling knife situation. It is literally playing on that Tom and Jerry thing that I teach in my Pro Dev program to quite some detail, and I go over many times of day. There's probably about 5 times of day throughout the 24-hour session where this sort of behavior happens. One of them is the London close, so you can get the same thing happening, arguably even more violent. You then also get this to a degree into the COMEX close. So for example, to illustrate that, here's the COMEX reversal, right? So this is half an hour before COMEX, settlement is looming. What do? It looks very bullish. It's like, oh my God, it's breaking out. Wow, let's go in. And then it just goes smash. So what is that? It's the time of day. It's basically forced settlement into the forced hedging into the close. Let's call it that way. And it's a take profit move for sure. Whereas this one, I would think that this is more a maybe a market on open situation. And then once all of that is done, you get the real move. And to a degree, you also have this behavior at the COMEX open, which is why I absolutely despise trying to run swings for the first half hour of COMEX. And in fact, many of my swings will start either very early for Asia or very late in the New York session. So if I want to run an intraday swing, that cannot happen in the middle of the day because it's like a very terrible. I mean, maybe it can happen around the London close. That's like one time zone where you're like, okay, maybe. Because if you can see here, where was that day? Hold on. Let me find that day when we... Oh, here we go. So this was also Asia. All right. So here is an intraday swing that started for the London close. So you go through the London close, you get this big massive reversal, and then your position is pretty much safe, especially if you're trading it with the trend. Now there is a caveat there that if you're trading against the trend, that tends to be more of a wobble rather than like some big swing opportunity, right? But if it sells off into London close and then it kind of reverses and starts going in the opposite direction, I actually like to hold those for like 3-4 hours or as long as the market will allow me to hold on to a position. Like on proper counts, it's obviously a little bit difficult to hold swings because you have to close them by a certain time. But that has always been my entry time. So I have this like 90-minute period between my 3 p.m. and just into and after the London close where I look for those longer term trades that will last me for 3 to 4 hours. So that's, one approach that I think is pretty unique to me. And I have a saying, time of day is a level. I'm very known in the industry by saying that. Why? Because time of day is a level. If you have an assumption that there's going to be hedging and profit-taking moves at the time of day because something is happening, either the exchange is opening or the exchange is closing, that's a level, right? So time of day is a level. I know that Coach Robert here, you don't use time much, but to me it's been invaluable in commodities. Like I wouldn't trade without it. I think maybe equities are not as sort of winding your clock by the take profit move, because I think in equities you can get the unwinding moves into the MOC, so that's like the last half an hour to the last 10 minutes of the day. But it has kind of the same mechanics. And then when it comes to the Euro close wobble, as I like to call it on equities, especially if it's a short wobble, so we've been going up, up, and up, and then we get to a London close. If you are attempting a breakout into the London close, just don't do it, because it's going to be a better opportunity if you wait for the Euro close wobble, and then that will be a better option for you to run maybe a continued break to the long side. So there is definitely a contextual thing of how long you should keep these, but we know that silver has been just screaming up, up, and up. So I'm not really that keen on shorting silver. Like every time in the last 2 months when I tried to short silver, maybe there was like a couple of occasions where that worked, but every other time it was like, okay, let me try this and maybe I will try it on like a smaller stop. And if that works, great, I'll just take my small 2R multiples on a smaller stop and run, or I'm just going to let it go and respect the stops and just go, ouchie, let's move on. This is going long. It's been absolutely relentless. So, by the way, the options are positioned. We're still fairly bullish. The only thing today that's a little bit of a caveat is that slight IV expansion that is always a little worrying, right? So whenever something rallies and then so this was a bit of a dodgy rally, but still a rally, right? So we still went up into the all-time high, and then we sold off in COMEX. COMEX close. So whenever there's an expansion of the volatility on a rally, that usually means market participants are a little bit cautious. But I've also seen it where last time that happened, actually, let me remind you. Here we go. So last time when I warned people about the expanded volatility, this is what we got. That's what we got. But, this was a bigger expansion. The expansion that we have today is fairly minor. I think the last one, we went from like 40 to like 43%. That's a 3% expansion. Whereas right now, we're just kind of, let me just double check the IV numbers. I did this earlier, so let me just go back and find it in the plan. IV, where are you? This is like riveting TV. D looking back through her plan for the day. Okay, so let's see. Where is the IV? Christ, come on. How much data do I have here? I'm also a little bit slow due to the lack of sleep, so give me the benefit of the doubt here. Okay, come on. It's somewhere here. Let's see. Because I have a volatility tracker, but I did do some other research here, so I have quite a lot of data. So we did have heavy call buying, though, continuing. So we had a 1% pullback overnight, and then more calls came in, so that's pretty bullish. Yeah, so we had I think we had like maybe a 1.5% implied volatility change, so yeah, not that terrible compared to the day when we had kind of smashed down. But as always, there are technicals that you can rely on. Like I said, Asia low and Asia high. That's the first session that gives us price discovery levels, right? This is why we all use it. It's not because it's like, oh my god, what did Asia? It's like, no, it's the first session that gives you price discovery. And back in the day when we didn't really have anything trading through the Asia session, it was just like COMEX and then nothing. It was a bit more difficult because you don't have that overnight. So all the price discovery has to happen during the regular trading hours. To me, that's always very, very tough. Much, much more difficult than anything. So yeah, slight caution here with longs, which is why, I have a fairly small stop here. Like usually I use like an 85 tick stop, but I'm only using just over like 30 ticks. Primarily because, obviously the smash down enabled me to do that, but still, it's yeah. Shiran also wants to know ID. Once you said there was a time entry, how would you know where to place a stop? So my stop placements are usually not connected to the market structure necessarily. So I do try to not put them at the round numbers. So for example, if let's say that I'm entering around 66.20 where we are now. Some people will be putting their stop right where my entry is, underneath the perceivable low here because, oh, there's the structure. But really, if you want to do that, this will get taken maybe, so you have the probability of the inside lows getting swiped before they do anything. Whether now or whether in COMEX, I don't know. But the only time that doesn't happen is if we move drastically away from that level, and then it becomes a matter of energy. You're going to have a lot of volume there. But my stop losses are based, the sizes are based on an entirely different thing. So I actually have a way to calculate the average session ranges, and then that's basically like an ADR, but I call it ASR, and then I calculate that over the number of, like, let's say 10 to 14 days prior, just for that time frame. So if I'm trading London, you know, that would be probably a smaller stop, but I frequently trade through several sessions, right? So I have to base my stops on the largest session available, which in this case would be COMEX. So let me see what the COMEX size for that average session range over the last 10 days is 372. So what I do, I have a formula where I will do something with that number to give me the best probability of having a stop loss that is large enough to sustain the moves, and you know, any kind of wiggles through a 30-minute time frame typically. So this is why you see me using bigger stop losses, but that always comes, especially in prop accounts, with lower sizes. So you cannot full port on the way that I'm doing things. Why? Because the stops will typically be much larger, so smaller size has to come into consideration. If the account gets to like 6-7 figures or something, then obviously you have more flexibility on that scaling and sizing. And on some of my biggest accounts, I only use like 0.3% risk per any position. And that might seem like a trivial amount, but it is extremely stable. However, you have to have a lot of capital to do that. So on prop accounts, we have to be more aggressive, and I will go up to 4% of the available account balance on the actual stop. So whatever that is, I will try to size down so that my bigger stops can fit into the overall risk model that I'm trying to achieve. But yeah, placing your stops like most retail traders do, the way I see them, they will place it right underneath. Like, for example, if I take an example of a long position, so let's say we're entering here because, you know, 66 was reclaimed, so we're going to enter like that, and then some people go, I'm going to place my stop right here. So what are you doing there? Let's have a look at what the prices are here. So where is your stop? It's right at the round number, like a few ticks out. This is a badly positioned trade. It's a badly placed stop loss, right? Why? Because you're asking for it. You're just asking for it. Your stop is so close to that round number that you know that they're going to take that. But I also don't freak out if the round number that I entered in gets retested, because I know that the stop below at 65.70 and 65.67 are stronger, and even if they wick through this, you can also look at it this way. You have inside low, inside low. So if you go 1, 2, placing your stops below the second low has more chances of survival. It's not a guaranteed anything, but it has more chances to survive than the one that you place here. However, people are like, but I can't risk that much. It's like, that's a you problem. That's not a market problem, right? Market will do the same behaviors over and over. They will find liquidity below the nearest lows. So by you placing your stops there, you're either looking for some crazy momentum trade, which this isn't, because if you look at where the value areas are, we're inside COMEX value. This is all COMEX value. This is London value, right? So, you know, you freaking out and going, oh my God, what's happening? It's not the best way to be. So just keep that in mind. Oh God, I'm tired. Crude, is it a good short? Maybe not just yet. We'll see. So yeah, my entry was just purely a time-based entry, Xian. Yeah. And I can see a couple of people who are like, oh yeah, they were done by the issues. I'm just going to say that this is my just personal opinion. It's not opinion of Topstep yet, but it's a bit odd. I will just say this kind of smells like something else. And if that's the case, things will become a little clearer, but I'm not going to elaborate anymore on that. However, I have worked in software long enough to know when things are looking a little odd. Yeah, so we're having a triple bottom here on silver now. We've got 3 minutes until this 30-minute time frame finishes. Triple bottom could be an interesting structure because it means that they were not able to even take the liquidity of the nearest low. Could be looked at as bullish, but again, I am biased. Like Hogue says, you don't get smarter when you're in a position. It's definitely true to a degree. Because you stop being objective, because now you want the trade to work, and your objective goggles are somewhere in the corner being thrown away. So yeah, we have to be very aware of that situation. And for now, it's just a retest of 66. But yeah, today, not as clear a picture as I would like, but I'm still just taking the fact that we reversed from 65.70, roughly, just above that, reclaimed 66, so I would like to see the same thing happening. Whether it happens now or much later, but at the moment this is looking like a range for the London Euro stream. Alright, isn't silver reversing right now? To me, this is just a London reversal, something that I like to absorb. And it reversing would need, for me personally, I would need it to at least go into some kind of an initial balance extension. Now, initial balance, let's put those markers as well. I use initial balance to figure out whether the auction is actually doing something or whether it's just not doing anything. And for now, we're building structure. We're already 4 TPOs deep in and around this zone. What does that mean? It means that the previous 4 candles have built just a consolidation. So they keep going sideways and building more structure in that area. So in market profile, that is called multiple TPOs, and we have not even exited outside of the initial balance. So to me, that's not a good auction or for anything. Why? Because the other time frame participants are not here. They're still asleep. They're like, we don't know. So maybe once LME starts trading, there's a kind of a knock-on effect on the precious metals as well. Things start livening up, and then the real party starts in the precious metals when COMEX opens, or just before, like sort of 1 p.m. my time. That is when you can expect a little bit more activity. Oh God, running on 2 hours sleep is not a good feeling. I swear when I was younger, I was able to have some days where I'm like, oh, okay. But now lack of sleep is so detrimental to me. Yeah, so as long as we're building TPOs, and actually let's put a real-time profile on here. Okay, so for a good reversal and momentum move, you want to see the prices extending below the value area even on the current profile, okay? So you have the previous day's profile that gives you sentiment in the way I like to do things. And for now, London is sort of bullish because we're sitting around value high. This is London. However, COMEX is still undecided because we're inside value. So all of that is just like acceptance of prices at this point. And it's nearly always spells some kind of a neutrality. Not always, but I would say there's probably about 70% chance that if you open inside value, that you're going to end up in a neutral day and it's not going to go anywhere. So that's not that great. I would like to see some sort of initiation into this former conterminous line and above Asia high, and then subsequently a gamma squeeze through 67. Whether I'm going to take, stay in on this, I don't know. I might just going to take profits somewhere around here because that's a decision point. Maybe I'll decide what to do after that, whether I'm going to run the break or maybe a fade, Asia fade. It depends on the time of day. Time of day is the level, right? So if we get to Euro close and we're only at Asia high, so we get that spike that is not bigger than 3 times of the surrounding bars, and then we start to reverse, obviously that's going to be an Asia high fade, in which case my long should be killed in order to make way for this new opportunity that has all the conditions for the opposite side intraday trade. But if you look in the profile today, you can even see it building value here. So we have not exited from current day's value. We're still dead in the middle of it. That's not a good reversal. So we do need to see some other time frame participants, as they're known, bust through the initial balance, high or low. And then maybe if they bust through the lower and come back into the initial balance, so they come back above 66 without any major selling wicks, that is then a cause for a failed auction long in London. But all of that gets obliterated as soon as COMEX arrives, because then you have new references. So you have to, like, if you're going to trade through multiple sessions, and this is something that I've struggled with objectivity-wise, trading swings is where I started. You have to understand the times where the wobble the opposite side and your invalidation points is still not invalidating the swing, but it might be retesting your entry, and you can't freak out. Whereas you guys freak out whenever you enter a trade and there's not an immediate move, or there's an immediate move and then you kind of retest it and then you kill the trade. I have no such issues after 19 years of doing this, okay? I've trained myself to know the times of day when the reversals can happen, to absorb those reversals to the best of my emotional ability, and then to just sit on my hands and wait. Because me sitting and not doing anything brings me more money than me actively managing the trade and ultimately lennying it, as Hogue likes to say it, basically just over-managing to the point that you choke it to death. That's what that means. It's a lovely analogy. Very dark from our Hogue. But it's a great analogy, because you like, people always ask me, D, where are you going to trail a stop? I'm not. The invalidation point is if we smash below Asia low, not if it goes below this low and slightly goes into a bit of drawdown. I am willing to take the risk here. Willing to take the risk. So I do not want to mess around with stops. The only time I will do anything with it is because if I get 2R multiples and I'm in with more contracts than one, and I get to 2R and I want to hold it longer, I will kill the position by half. So I will partial at 2R, and then I will let the rest run. So if I notice a swing opportunity that has 4, 5, 6, 7, 9R opportunity, which is not every day, by the way, not every day, then I will partial, leave the stop where it is. I'm not going to mess with the stop still, because at that point you should be pretty far away from your initial entry, and there's no real danger because you've gone into more price discovery at that point. And then you're expecting a gamma squeeze. So my decisions there will always be based on whatever the options dealers are doing, and I try to position myself with the option dealers rather than against them, because that just doesn't work for anybody. And this is why gamma exposure, especially in this day and age, it's taken the center stage almost, because now it's so easy to obtain that data. Back in the day, it was actually really expensive. But now it's, it's everywhere. You have Mentor Q, you have Bar Chart, you have like many other companies that only cater for equities. But I like Mentor Q because they cater for everything. So they have options for every product that has options activity. And, they do use end of day levels. I use a combination of Mentor Q, but also a monthly options overview. So I have some algos that help me crunch all of that. Like I said, I have the IV tracker and a whole bunch of other things. And then I just break it down by the points of interest, and they become sort of my roadmap for the day. Now, if I start to get involved in between those, I know that I'm slightly tilty. I'm like, well, I didn't wait for that level, but now I'm trying to get involved in the middle. Like, what are you doing, D? And that's the point where I have to censor myself. It's not like, I don't know what's happening. I know exactly what is happening, and I know exactly where I should be long, or if it runs away from me. Like, let's say I want to be short from 67, but it runs away. and then I'm trying to short it at like 66.50. It's like you're looking at a massive risk there, right? So it's like, what are you doing there? So that's the kind of things that I struggle with, where, you know, I'm either not awake or something else has happened and then I couldn't be at the chart, you know, where my dogs were sick, or, you know, I had to go get a package, or I don't know, something happens and I'm just not able to be there. So I like to use alerts so that even, you know, when, like for example today, let's break down the levels for today. So I have 66, I have 67, now 68 and 69 are a bit weak, I'm going to be honest. And then if we break through the Asia low, I have 65. So therefore my entry needs to be within, at most 85 ticks from, not exactly from the round number, but let's say if I wanted to be short from 67, let's just put that as an example, and let's say that I wait for the market to smash through Asia high in reverse. So what should be my stop? So what is my stop where I'm still positioned pretty strongly with the stop loss, but I'm not going over my 85 ticks maximum stop, which is what's in my plan at the moment. So I would say that I would really need to be entering no lower than 66.75, because if I enter any lower, then my stop of 85 ticks, let's say like this, 80 ticks, would need to be very close to the round number. And I hate that, because that means, what if it gets retested? Then I have a deep, deep drawdown. So really, I cannot allow that to happen. So my ideal entry is somewhere in this zone. So if I miss that, the train is gone. I'm not going to be able to enter a position because I missed the opportunity altogether. So I kind of work backwards. It's like, where's my stop loss placement, and is that above the round number and by quite a bit of space, to make sure you have room for the price to retest the relevant orientation level that you're basing your things on, and your position still survives. So that's why a lot of the times I don't really freak out when my position goes into drawdown, because it's almost expected. And in fact, when I'm trading with size, when I'm trading like, you know, 20, 30, 40, 50 contracts, I have to scale in. Like, I don't want to plow into, you know, a silver position all at once, because that's going to A, have an effect on the market, and B, it's not going to be very good for the price action and for the market participants, and for me either. So I like to chunk it in like 5 bits, so 5 lots at a time until the position is done, and that means you have a zone that you're working in, but you're working off a hypothesis that your entire position has to be done inside this general zone with a final stop loss that doesn't change, somewhere in between 25 and 37. So if you can get it really on the nose at 67 and kind of build all of your position in a very tight range, then you have a really, really strong positioning, which would be, you know, all the way above 63.30. And, you know, 30 ticks, 30 points from the round number, that tends to be a really, really strong stop. So, you know, those are some of the things that I think about, and they keep me up at night. Oh, God. I have this, like, this chest feeling that I can't breathe properly. Yesterday's silver breakout, so Oakland Torch says, question. Yesterday's silver breakout left a void with no contracts were traded between 65 and 65.21. Will the markets want to bring back to this price to fill void? So I don't know. I mean, I have the similar data to you, but one thing that I can tell you is that I look at this as a congestion now, as a repair or a slight test of the area that was actually done for Asia on the 17th of December. So this was the Asia move. Now this is a very bullish product. If you ask me the same in crude oil and the chart looked like this, my answer will be different because it's contextual. Crude oil is short biased. So will we see a repair of this area? On silver, I doubt it. Why? Because we tested it and we actually created a situation where, okay, so on this day I was looking for 65 tests. So this was annoying yesterday. Because I was looking for a 65 test, it only tested 65 to 22 and then turned around and went without me. So I was a little bit ticked off, I'm not gonna lie, because I was like, what? But that sort of gave me the outlook that silver is really bullish. Because if it can't even touch 65, which actually has still, even today, quite a lot of open interest sitting there. So I can find you the actual numbers here that I've taken from the options. Again, it's gonna take a while. So let's see. How many contracts? Let's see. I have to do a prompt here, so. See if I can automate this a little bit. Yeah, so 65 still has 1,900 calls there, right? No, sorry, those are puts. Oh, that's interesting. So we have some puts that are sitting at 65. So in a way, I would say that 65 is a do or die zone. So if we get to 65, that, to me, seeing this, it's actually not going to be support. It's actually going to be like, whoopsie, we've gone too far down, and then you can get a negative gamma taken over, and then they're just going to start going into a stop cascade. But it is a support for now, sort of. Yeah, I just don't like that. I don't like that the puts are just like so stacked there. And those are probably some protective puts. Now, but on the upside, we have we have 70 on the opposite side, which is with the trend, and it does have about 1,000 there from the last time I pulled this. So it is smaller than the one at 65. Does this mean this is going to be a bearish day? I don't know. Maybe. But again, for my bear thesis to play out, I need at the very least 66, 65. So I'm not going to be shorting it in the middle anywhere. The only time I would short it is if we smash through Asia, like away from that level. We smash through Asia low quite a bit, then we pull back to Asia low, and then we sell off some more. So at that point, I will be using Asia low as a potential continuation trade. But right now, London is not doing that. So yeah. So will we see 65? Maybe. It's all within the day's range today. So the ADR low, if you want to know where my levels are, at the moment is sitting at 64.55. So let's mark that. So 65 is definitely on the cards today. Did I put this already? See, I don't remember doing this at all. And yet I must have done because it's there. Oh boy, yeah. I don't know if I should be actively like trading today. If this one doesn't work out, I might just like sit out. I don't think this is a day for me to try doing my 3 to 5 trades. I literally have no memory of putting this on the chart. When did it happen? Nobody knows. So let's see the ADR high, 68. 68. So all of this, I know it looks like a massive target, But this is silver for you. This is the range that we're working with. On the daily time frame, it's got like $4.50 of range. That's 450 ticks, which is really nice, right in the sweet spot for my type of trading. And if we start to rise, but the thing is, there's a caveat here, because if a gamma squeeze takes over above 67, 68 in the options, as well as 69, they're really thin, like there's nothing there. So the only thing that's going to cause a reversal at those points is the forced hedging into settlement, either for Euro close or for COMEX close. So don't fade, or don't do breakouts long if you're at those 2 pain points today. Whatever breakout, if you're doing a short breakout and we're coming into the Euro close, just don't do it. Wait until they shake it out and then position yourself for a further move. Just don't go rushing into anything half an hour before London and half an hour before COMEX settlement. If you take anything from today's class, that should be it. Right, I don't know whether I can do the full 90 minutes today, guys. I'm kind of fading really quickly. So I'm probably just going to be here for BC. I will be BC. Yeah, I'm going to travel back in time. Of course, you will be. So I'm probably just going to do an hour today, and then I'm going to go and catch up on some sleep, because this is crazy. Yeah, Manny was just so annoying. I mean, a poor boy. I have full sympathy for him. But literally the entire night. Like, for the entire night. And then he would settle a little bit. I would tittle him. And I spent most of the night touching his chest and going, Manny, you're a good boy. It's okay. You'll be fine. You're a good boy. You're a good boy. For 20 minutes at a time. And then he would go to sleep. And then I would be awake. So I'm like, oh, brilliant. And then he would start waking up 2 hours later, squealing again. So I did give him one of the other medications halfway through the night. That seems to have settled him a bit. But then he woke me up like at 4, then at 6. So it's like... And those 2 times he didn't whine, but he just climbed on top of me. So I was like... Suddenly I have 7 kilos of weight on my back. And I'm like, well, what are you doing, mate? And so that was not very fun. But it was not fun for him either. Oh, Bruno says he's not feeling that great either. Okay, so let's make an executive decision that we're going to end the stream in about 10 minutes, okay? Because it looks like neither of us are exactly firing on... Okay. Yeah, so silver doing absolutely nothing right now. It's still inside value, still maintaining that triple bottom and establishing the range that we always see for this time of day. So yeah, this is probably going to be a bit of a snooze fest. So if anybody else has any more questions, this will be the time to ask them. Yeah. Faisal says, it hurts when someone cuts your balls off. Yes, I can imagine, but he does have a lot of it. Like, he was given a local anesthetic while he was under. He was given extra painkillers, and he was also given a gabapentin. So his pain is well managed. It wouldn't be that. However, some dogs, because they don't know what's happening, they get this like confusion. And the funny thing is, this is my first time with a male going through this. The rest of them get the injection, but this guy has a bit of a behavioral problem. And the reason why we had to do this, he's very small. And he's a cutie with us, but first of all, he's posturing with one of our big boys, and our big Bernard is beautiful. Like, he just doesn't care. He's such a kind of big girl's blouse. He's afraid of everything, kind of, but he's also very sweet, and he doesn't cause trouble. And yet Manny, the smallest dude, he would start posturing with him, and he would be like, and then he started doing that with Crichton as well. And then Crichton and him had a couple of moments in the park when they were fighting over a bull, not like fighting teeth out, but they both grabbed hold of the chucket, and it was, clear that Crichton was going to win, but Manny would not let go. And then the final, this has been happening for months now, and then the final straw, he actually bit one of the handlers at the daycare when she was trying to get a branch out of his tail. And she wasn't doing it super hard or anything, but I think she's new. He's not sure. He was like, who are you? Why are you touching my tail? And he actually bit. So, unfortunately, mate, when that happens, snippity snip, right? And I know that he doesn't have that when he is on the implant injection. So this is why we do the implant, to make sure there's no adverse behaviors. And he's a sweetie whenever he's on that. So he's only interested in the ball. Doesn't posture with Bernard. They sleep together. You know, they're like all cuddled up and stuff. So it was time, right? It was time. I don't take nonsense in this house. We've got 8 dogs. And if either of them start fighting or anything, that could get ugly quickly. So, you know, I'm a responsible dog owner, and any sort of issues between either of my dogs, that is cut in, and they know they're not supposed to do that. This is why he did it at doggy school. He would never do that here, and he would never even think, because we're the leaders, we're protectors, and they trust us. But strangers, it's like, however, that's still not acceptable, right? So I made an executive decision with my husband that we have to get this done, because enough is enough, right? So yeah, unfortunately, Manny Boy has gone through his trans surgery. But not trans, because the main appendage is still there. It's just the eunuch surgery is more likely. And yeah, I'm sure that it's quite sore. However, his pain is managed. So it wouldn't be the pain. It would be the confusion from all the stuff that was done to him. He was a very good boy at the vets, though, so everybody cuddled him before and after. But yeah, when I picked him up, he was a bit shell-shocked and very subdued, which is not like Manny at all. So yeah. Do you keep your trade even with CPI? Usually no. And, you know, with the CPI, copper is more likely to have a big reaction because it's very sensitive to inflation. Silver is sort of middle of the range. It depends whether, you know, there's some automobile changes, because silver obviously is very involved in the production of components and stuff like that. But yeah, it just depends. But right now, you know, like I said, if this gets to like 66, 65, and then up, if it reaches Asia high before any sort of releases, and what do we have today? Let's have a look at the calendar. I can find one of the browsers that works. Oh my god. Okay. I'm looking for a calendar. Yeah, so CPI today. So I might just take profits wherever this is if we continue to rise, and then focus on copper. Yeah, because copper moves a lot for the CPI. But no, if I'm anywhere near, like for example, in order for me to keep silver through the CPI, I would need to see it above Asia high and above 67. Then I would keep it, right? Then I'm like, you know what? At that point, I have enough time to decide, because you will be how far away from your entry? Let's see. So if we're over 67, I mean, you know, I would be at that point, I would be over 200 ticks in profit. That gives you time. It doesn't mean that you should still keep it, but, you know, it's just contextual. So if I'm in a swing trade that is already busted through some important points, it will give me an opportunity to decide what do I want to do with it right after. Why? Because I have space. And then I have, you know, at least 100 points of space. You know, if it starts to bleed back through the Asia high, and there's no, you know, pullbacks into some kind of a buying wick or something, and if we're not ending up in positive delta, or the delta, let's say they have an initial negative reaction. So there's a reaction downwards, and that shaves off the delta, but then immediately after, they pull it back up. So you see like the spike on the book map. That would be a course for me to stay in, so that's not a course to get out. It's just like the initial algo spike. Manny's starting to make noises now. Where are you, Manny? You're right. Yeah, so very contextual. But if I have space, and if it's you know, enough points, like 200 ticks away from my entry, I may keep it. But if it stays at these levels, absolutely effing not. So it will be, you know, grab whatever you can, just get out and wait until after CPI, and then things will either present as a new opportunity, or you just have to go, well, I made the decision to close it, let's just wait until the euro close. So then you wait for another I wait for another 2 hours, and that will be it. All right, we've got 3 more minutes, and then we're going to finish the stream because neither me nor Bruno are feeling great. So, yeah. Daryl says, yeah, locked out yesterday when I closed my trade literally 2 minutes before it went down. Yeah. Backwardy. Topstep is becoming a bit weird. Listen, like I said earlier, just my personal opinion, but looking at how these attacks are happening, there's something else going on here. So that's all I'm going to say. Like I said before, there could be things going on that you guys are not aware of. And what sort of payout problems? That's because I've never had any problems with payouts ever, and that's the reason why I stick with Topstep. They don't have funded consistency rules, so you just need 5 days of over 150 on the new dashboard. They don't really have, you know, extended reviews or videos or, you know, funded consistency, and frankly I will take the no consistency and funded over the other options at any day. So, you know, I understand the frustration of everybody, I really do, but just give Topstep the benefit of the doubt that they've grown so much, and somebody somewhere might not like that. You know, just a hypothesis. This is my own personal opinion, right? But just looking at some of the things that have been going on, yeah, it's a bit weird. So yeah. Yeah, I get payouts 24 hours on on the work days, and like at worst, if I request it on Friday, it arrives by Tuesday. But only because they're not working for the 2 days, right? So yeah. Another stuff says, do I use Claude locally or I pay for API? So I pay for API. So yeah. And he says, would you please? So I use. So yeah, API connections are not necessarily cheap. So yeah, just be. You know, I don't know how much you want to spend, but every time I sign up for another API ping service, it's because of the amount, and you know, the more pings you want to do to it, the more expensive it gets as well. But yeah, I have Cursor AI. Again, it's a company account, so we share it between the team. But then obviously for any kind of external data, that has to be done via the API. If you want to do it for cheap and with a delayed pricing, that might be an option just by copying stuff from bar chart, but just know that there is a delay. Not that that's too much of a problem with the option side, because you know you would be using typically monthly options to run any sort of API calls, or API, not even API, but just kind of doing raw data entries. Just kind of copying it from the website and into Claude. But yeah, it does get a little bit pricey sometimes. It's just the nature of the business. To me, that's the cost of business, not necessarily blowing up combines. Could I give us some levels on copper? Listen, I'm going to do that later because I need to sit down and actually do a deep dive, and I haven't done that in a while on copper. So if you go to the description box, you will see my Twitter there. So you know how I've done the levels on silver on there. So follow me on there. I will give you the same type of analysis on copper. Okay, so keep your eyes peeled. All right, that's going to be it for today. It's short and sweet, just an hour today. But thank you so much for joining me. I'm going to try and keep this for as long as I can. If we get close to the CPI and we are not above 67, I'm killing this thing, so wherever it is. And that will probably be it on silver for the day. Thank you for spending time with me. Hopefully you found this this educational, and I will see you. What's the date today? Is it Thursday? It is, isn't it? Yeah, so I will see you probably next week. I was supposed to be on for group coaching tomorrow, but unfortunately it clashes with my previous engagement, so I don't know whether I'll be back in time for that, which is a little bit tricky. But anyways, if I don't see you, have a lovely weekend. Let's get this holiday season going. Yeah, have a great weekend, and I will see you very soon. I'm Mark Stoker D. This was Topstep, and this was the Eurotrade. Enjoy.